Hey traders, welcome to Charts and Coffee PCE edition. We are about 30 minutes removed from that hot zone at 8:30, the Federal Reserve's favorite way to understand what's going on with inflation. This is the number that's built into their models. And yes, while there might be other PCE numbers out there, which is the one that we pay attention to. We pay attention to the one that comes out today. That's the data that moves the market. And you'll see here with a cooler than expected result, equity markets are up. I mean, this is no surprise to anybody, right? We are expecting the Federal Reserve to cut in March, if not March and May. So I thought I would do this with everyone here. And by the way, the notes that I have, I wanted everyone to get an idea of some of the things that we do in the Sector Secrets Mastery. So both on Thursday with GDP and today, Friday with PCE, we did a morning session, futures oriented. How can we trade futures contracts with these pre-market hot zones and manage risk and have automated zones and place limit orders, then wait for the volatility to carry price to the levels that we want. So I'll get to those setups or those trades, I should say, in just a moment. First, I want to jump on over to the FedWatch tool. There we go. CME FedWatch tool. It's amazing, amazing distillation of what's going on macroeconomically via the Fed Fund futures. Don't worry about January. That's a non-starter. 72% expectation, gang, for a cut in March. Now, some chucklehead's going to say, yeah, but they could hike 16%. Someone could say, oh, they could cut 2 quarter points, half point cut, 11%, 12%, right? 72% expectation for a cut in March. And with every piece of macroeconomic data revolving around the two mandates that the Federal Reserve has, jobs and inflation, we're going to take a look at what's happening in March and in May. Now, take a look. Not only are we 70+% expectation for the quarter point cut in March, there's another quarter point cut in May. Now, granted, if the Federal Reserve takes a look at this and says, whoa, traders are getting way out in front of this narrative, we might be, right? Collectively, we might be. And the Federal Reserve will then course correct, right? The Federal Reserve will course correct the expectations we have, because this is really a two-way communication device. It's like those walkie-talkies we had when we were kids. I don't know about you all. I used to get walkie-talkies every Christmas. And I thought that was the greatest, most amazing tech ever. And this is kind of like that walkie-talkie. What are we telling the Fed? You better cut or start to adjust their expectations, because come March 20 and come May 1, this is what we expect. And if the Federal Reserve says themselves, we're not going to deliver that, their commentary, their speaking engagements will start to reflect less dovishness. Gang, we're getting cuts next year. It's a matter of how many and when do they start. But the cuts are coming next year, because what's the point of hiking if not to cut? All right. So that's the end result of the PCE. Of course, these numbers will fluctuate, but this is what we have 30 minutes later. All right. So what did we do with the PCE? All right, Rag, how do you trade this? What we do is we use the hourly price movement ranges for our zones, and you'll see right in here exactly what we did. We start 8:15, so I want to give myself a 15-minute heads up to put the plan together, to find my zones, to find my targets, and place my limit orders. Gang, I know a lot of you know me, a lot of you don't. I detest market orders. I don't use them. They're orders that are gateway drugs to most certainly overtrading, poor fills. They're the kind of order that's just a dopamine type order, and it's a dangerous thing to do. Now, experienced traders certainly have the discipline that they've developed over years, if not decades, to make sure their market orders don't become a monster. But that's really what they are. The only way I could have caught the two entries that I had today, and I have two entries on today's hot zone, is with limit orders to buy. So before the hot zone came out, these were my limit orders to buy in the S&P. Now, my NASDAQ ones I was 10 points shy on the NAS. That's okay. No trigger, no trade. Either price comes down to my level from which I already know what the acceptable risk is, or it doesn't, but that's okay. The S&P did. The most aggressive level, which is to say the smallest position I could even put on, was a limit order that I parked before the hot zone at 47.89.5, tagged it. You think I could have gotten that with a market order? And imagine what that fill might have been. All right. So I'll step off my soapbox now. Got my fill. First target, as you can see, 47.95. Second target, 48.07. So that's a pretty sweet and easy trade on this move. And by the way, micro S&P is great too. The other trade that we took, and I'm usually hesitant to trade bonds on data like this. However, we went ahead and set up, as you can see here, the ZB. What was the idea with the ZB? Let's grab 124. Here we go. Let me put that right here in bold so everyone can see that, because even I was getting blinded by my studio lights here. 124.08. My stop was 124.06. We got down to 124.07. Very tight stop. I was in no mood to deal with any shenanigans coming out of yields. They should go up as yields go down in light of higher expectations of a Federal Reserve cut. So that's what we did there. First target. Well, actually, we did a couple interesting things with bonds. We said, hey, if bonds get to 124.13, let's move our stop to break even so I can make that risk management adjustment as quickly as possible. And by the way, gang, this is all stuff we did in the Sector Secrets Mastery session this morning. So if this kind of futures trading is appealing to you, you definitely want to check out what we're doing. Our sale for the holidays and the end of year, I believe, start as of today. So take advantage of it, gang. My theory is this. If there's some tools, classes like my day trading class we did back in August, September, if those things are appealing, buy them on sale. That's always my recommendation. Save some money. So we went ahead and got the 124.08, placed our stop, and then on the way up, we wanted to scale out, most definitely move to break even at 124.13. And then now we've hit the T1 at 124.17. So we scale out as something goes in our favor. Bummer that we didn't get the NQ, but 2 out of 3 will still land you in Cooperstown, right? Okay, so that's what we did this morning. And if you want to know more about hot zones, by the way, the do's and don'ts with hot zones, check out countdowntrader.com, gang. The Trish boss, as we endearingly call her, has put a great update because we have a lot of important hot zones and opportunities that come with them. What are the do's and don'ts around trading high impact scheduled events, right? We all know that they're going to happen, but how do you capitalize on them? What are the things that I do to find trades like ZB and ES and NQ? What are the things that I don't do? Things like, I was actually reading to the members. One of my favorite things is to read YouTube comments on videos, most especially mine. And the number of prognosticating warnings of a big reversal and that the PCE was going to come in hot, that's a big don't do. Because guess what, gang? None of us can tell the future. So we take more of a reactive type reaction. So check that out, countdowntrader.com, the do's and don'ts of trading hot zones. All right, so let's get to it. As always, go ahead and type in those questions. What symbols are you looking at? What time frame? Do you have a position? Are you looking for a position? Let me know, and we'll jump into them. All right, first up here, and let me make sure I'm keeping an eye on my ES, gang, because I still have a open position here. Oh, by the way, so as we hit 48.07, right? So when I hit the first target, I moved to a break-even stop. Here at 48.07, I'm going to move my stop to my first target. So we ratchet up with the winner. So at some point, we have to risk unrealized profit, gang. That's one of the biggest things traders who want to trend trade don't do. They don't get comfortable risking money that really isn't theirs. That's what unrealized profit is. So my Sector Secrets Mastery folks listening in, move that stop to a trailing now to that first target. All right, Mark asks, Merry Christmas. Is the Santa rally here? Well, if it's going to start, it starts today, Mark. But one of the things that I've been mentioning in Top Tier Outlook and in the Sector Secrets Mastery, and you asked a great question. Let's talk about what the Santa rally is and when I would say it begins. Santa rally is really the tail end of what's known as window dressing throughout the month of December. So strength gets stronger. Santa is sort of that last push into the year where, again, that jockeying for putting outperformers in a portfolio, because that's the show and tell, gang, your year-end portfolio. So window dressing is in fact absolutely real, and that's why strength gets stronger. But Santa has a super elf by the name of Jerome. I bet y'all didn't know that Jerome had another job. He's Santa's elf, and he is a dovish elf. So one of the things we've got to keep in mind with the Santa rally is it window dressing alone, or are we starting to see the dovish expectations that are clearly mapped out in the data? Are we starting to see that come into play? Because that's just another reason for the Santa rally, which is from the 22nd to the 29th this year, right, to roll into the Q1 of 2024. So, again, I don't wait for the Santa rally. For those of you that have been in the mastery, those of you that have been reading top tier outlook, window dressing is real. And now we've got dovish expectations. And for those of you that have never traded a monetary policy shift to a dovish monetary policy stance, you are in for a treat. It's really a great environment for bulls who like to buy the dip, and for traders who understand how to map the macro. And I'm really looking forward to next year. This year was okay, but it was challenging because we had a lot of shifts from the pause to the hikes to when we're going to cut, and then all the macroeconomic dance in between this year. But this year proved that the equity markets can indeed rally even when the Federal Reserve is hiking rates, because we did. Last time I checked, ES and NQ are at new highs, and I guess some folks out there are still waiting for the big crash. That's okay. I'm happy for that. I was telling the folks in Sector Secrets, I'm salty today. For folks who want to prognosticate and guess and try to pick tops and uptrends, great, because us buyers need someone to sell to us. So keep it coming. I thank you all for trying to pick tops in this uptrend. And anyone who's been long, like we are in the mastery and things like QQQ, give those folks a big thanks, because I need the other side of the trade. I told you I was salty. All right. So next up is Microsoft. I think I saw that scroll on by. Green eggs and ham. Yeah, Microsoft, one of the magnificents. All right, one of the magnificents, and one of the wobblier ones, right? So if I'm looking at Microsoft on the daily, which is the chart to the far right, and I compare it to Apple. Now, why would I compare these two? Because they're the number 1 and 2 stock in the XLK. XLK is moving higher. I want to see a stock that looks like the NAS uptrend, looks like the XLK uptrend. So I would say Apple will get a bit of a nod. But look, if this is going to be a rising tide, then for certain, Microsoft is going to benefit. Is it my favorite? Probably not, but I think you're looking in a great direction. Just maybe find something that's a relative outperformer. So that's the way we do that. All right, next up is Nike. On the hourly chart, hey, D. Bolton. So if I'm looking at Nike, this is part of the consumer discretionary conversation, which many of you already know is actually part of the NASDAQ. It's one of the top 3 weighted sectors in the NAS. So while I wouldn't consider Nike a tech stock, it is actually weighted in that NASDAQ group of 100 stocks. So when I take a look at Nike, look, consumer discretionary right now is not being led necessarily by the Amazon and the Tesla number 1 and number 2 weighted stock. It's actually being led by Home Depot, McDonald's, and Nike, or as I've been saying lately, in consumer discretionary, lumber, burgers, and sneakers, right? Nike is definitely one of those names that, frankly, D. Bolton, if I'm looking at individual stocks as opposed to the way we took advantage of the QQQ the other day, take a peek right here on the 20th. On the 20th, look at that dip right into the daily price movement range. So those are things that you look for in terms of movement. Is that, let's see, make sure we got that there. Yeah, those are things you want to keep an eye on, right? And then we go from that. But I haven't been individual stock trading. If I'm looking at Nike and I like the way consumer discretionary is moving, I will say this, D. Bolton. Now here's where the rubber meets the road in this conversation. I am not. Anyone who's read the 642 update that the Trish boss put in Countdown Trader knows that I am not trading Nike in front of earnings. Certainly not 2 days in front of earnings. There are cutoff for the 642, which, by the way, if If you go back out 6 weeks and start to find the uptrends into an earnings release, then you look for the dips into the daily price movement range 4 to 2 weeks before earnings. This was actually a really good candidate, I will say. But now I've got to give it some time to simmer down. I won't trade it today. I probably won't trade it till Monday or Tuesday of next week, if not Monday, Tuesday or Wednesday of next week, if at all. So remember, inside that window, the immediate window to the earnings, and then after, I'm going to leave it alone. But take a look at the rally into earnings. Now we're going to open at 107.50. This is my thought, right? This is the way I do it. I don't want to trade earnings. Do I really want to make a guess at whether or not Nike goes to 127 or 107? I really don't. I really don't. Look at what the better price action was before earnings. Is it that lottery scratch off? We could, have a big win if we're right on the trade, kind of guess on earnings? Or is it the more solid, definable, tradable rally into earnings? Nike was above the 200 in a strong sector. That's part of a strong index with a green trend. So this is where the daily price movement range is, 4 to 2 weeks before earnings. If you buy them 4 to 2 weeks before earnings, you're going to be able to avoid the implied volatility mess. And if you get out before earnings, then there's no vol crush issue, and you're not playing this binary, this could go up or this could go down. Folks who bought calls yesterday or even the day before by ignoring that window of earnings. Hey, despite the daily price movement range, gang, 2 weeks before earnings, that's it. I'm not going to keep looking for opportunities. But before that, it's fair game. And if I buy in that window 4 weeks before earnings, no closer than 2 weeks, right? I don't have implied volatility. I can get out the day before, and I could sleep really well, knowing that Nike could miss or Nike could beat. I don't care. We'll look to continue to buy dips if the uptrend is intact. I would say it's largely not going to be. So, Nike is going to be trading well below the daily price movement range, well below the 34 EMA on the high. And I would just say this is one of the reasons that I do not like earnings. I do not like trading earnings, but I love the environment in front of earnings. And that is what we've decoded. That's the process that we use the multi-trend and the DPMR for. All right. So there you go, gang. That's the way I break this down in terms of anything we're going to do in front of earnings. This is not individual to Nike. Find the uptrends and work the 642. Check out the update over at countdowntrader.com. And by the way, not this last issue, but the previous issue, gang, of Top Tier Outlook, I went into a lot of detail about the way that we're going to set up for earnings. And of course, we have our earnings sessions in the mastery as well. All right, next up, good stuff. Can we take a look at Tesla and IBM? So again, it's always going to be very bottom of the chart. What's the trend? Tesla's not trending. So I've said this for many weeks, gang. I have zero interest in Tesla. With as many names that are in trends, why would I look at CHOP? CHOP is going to be a lower percentage of follow through. It's going to be a lower predictability of higher highs. There's so many strong names in the current environment, whether that be financials, tech, communications, semiconductors. I'm just zero interested in Tesla. So, and then nothing has changed there, Praveen. Thank you for the question. As far as IBM, buy the dip. Yeah, buy the dip. That's it. All right. BLP asks, are my sector secret sessions daily or weekly? Yeah, I don't know why the sign up page was never updated. BLP, our sessions in Sector Secrets Mastery are every single day. And I don't know that I have the schedule in front of me, but I'll be sure to share it with you all next week. We are in the Sector Secrets Mastery room, and I'm not sure if this is an updated schedule or not. Bear with me. Is this okay? This is actually a good schedule, but it's not the complete schedule. We've actually added some sessions. So this is what our Sector Secrets is active every day. We have hundreds of members logged in during market hours, trading together. We've actually added a few sessions to this. We have bot scalping on Thursday. So we added that, and then, that's it. So it's just lacking the bot scalping on Thursday. We have a tech session every Monday. We have an Ask Me Anything session every Friday. So we bookend with a Q&A oriented session. And then every day we day trade the open, and every day we look for swings. And then, yes, gang, I'm going to share with you soon how our macro and position trades have performed in the last 14, 15 months since we started those last August. And we do that every Tuesday. That session alone has yielded a tremendous return in the longer term weekly chart built portfolio. So that's it. I'm live every day. I'm live in there every day. And then the bot has a number of sessions every week as well. All right. So let's see here. Next up is OIH XLE XOP. I'll tell you this. I'd like to put that on the list for early next year, right? End of year, I'm going to focus on strength getting stronger. I'm going to find those uptrends. But next year, yeah, I want to find opportunity into oil services, energy, oil and gas producers at, those three sectors, absolutely, including crude oil for that matter. Day trade it now, sure. But we definitely want to focus on it going into next year when we can start to see where we may get sector rotation. By the way, how do we know if we're getting sector rotation or not? That's going to be the next update in Countdown Trader. So stay tuned. How do we know we get wider participation with a dovish Fed or sector rotation? That'll be covered in the next countdowntrader.com update. Gang, I've got to go. I'm going to jump into the mastery here. Let's follow up on those trades we took this morning, see what other day trades we've got. I will see you all on Sunday. Yes, we will do a top tier outlook on Sunday evening. I know it's Christmas Eve, but I thought, you know what? I'm just going to do what I would normally do every week. I'm so grateful for the ability to do this. I love being able to pick apart the charts. We'll spend 50 or 20 minutes, and then we'll get on to whatever our other plans are. Of course, it's recorded, so you can catch it at your leisure. Be good to each other, gang. And if I don't see you, happy Christmas, and I'll see you on Tuesday.